Has started.
Thank you. Good afternoon to all. We welcome you all to this virtual CPE meeting on resolution plan under IBC, the important aspect, organized by Committee on Insolvency and Bankruptcy Code of ICAI. With me today we have Sri Priya Kumar. She is the Vice Chairperson of this committee, a very dynamic lady, handling the Corporate Law and Governance Committee as Chairperson and completely involved in resolving the new portal issues with respect to the LLP forms. And day to day, she is meeting with the Ministry of Corporate Affairs and Manoj Pandeyji. With me, the another council colleague is there, Hansraj Chubzi. He is the moderator for today, and he is also the chairman of committee for the CAs in the public service and business. The other gentleman with me is Gyan Chandra Mishra. He is insolvency professional, Chandra Council member from Ghaziabad, and a very dynamic person dedicating lots of time for CPE committee as a vice chairman, for examination committee, and for various other projects of the ICI, and he is also involved as the group convener of one of the book which is going to be published by this committee. Friends, as we all know that Insolvency and Bankruptcy Code 2016 has been introduced with the overall objective of promoting entrepreneurship and balance the interest of all the stakeholders by consolidating and amending the laws relating to the reorganizations and insolvency resolutions of corporate persons, partnership firms, individuals in the time-bound manner. When we look at the objectives of the code, the distinguishing features that comes before us is the resolution plan, which one can say emphatically to be a key success of IBC era. And because of this, IBC code came into the existence, the ease of doing business. Also, that ranking has also increased. We were at 131 before IBC code came into the existence, and now we are standing at 63 globally. IBC provides detailed procedures for submission of resolution plan and approval of the same by the adjudicating authority. It clearly specifies the steps for invitations for expression of interest by resolution professionals from interested and prospective resolution applicant to submit resolution plan. Further, it also specifies the mandatory contents of the resolution plan too. Friends, looking to the importance of the resolution plan, the IBC committee has come out with the handbook on resolution plan. Also, beside handbook on resolution plan, we came out with the various other handbooks on moratorium, personal guarantor to corporate debtors, corporate insolvency resolution process, claims, do's and don'ts for insolvency professionals, and liquidation process, voluntary liquidation process, and also pre-packaged insolvency resolution process. Besides this, we also have come out with the publications called FAQ on IBC in collaboration with the IBBI, where each and every FAQ is being supported by 2 to 3 case law which are settled already either in NCLT, NCLAT, High Court or Supreme Court. Considering the professional opportunities under the code, we have started the certificate course also, where the chartered accountants, by joining the certificate course and passing the exam which is there for the certificate course, can have the knowledge about the IBC as well as what are the various opportunities available to the chartered accountant fraternity. They can work on those as supporting services, as forensic auditor, as transaction auditor, as claim advisor, as a resolution plan preparer, as as the advisors to the corporate debtors, operational creditors, financial creditors, or to the authorized representative of group of creditors or so. So these are the various things which can be done by the chartered accountant brothers and sisters who wish to have their career into the insolvency and bankruptcy professions. The committee is regularly organizing these kind of VCMs for various updates with respect to the insolvency and bankruptcy code and various important subjects which are there for the insolvency practitioners who are the IPs, and we are also trying to have at least one case study analysis in a month for the resolved situations of any resolution plan which has taken place. So those kind of case studies are being discussed every month. Besides this, we are coming out regularly on monthly basis on the IBC case law updates, which is having the case law settled at NCLT, NCLT, High Court, and Supreme Court. So with this, I thank you all for being a part of this VCM, which is going to be addressed by R.K. Bhutaji, a very senior chartered accountant and insolvency professionals who have handled various cases under the insolvency and bankruptcy code and successfully resolved 3 to 4 cases with him. With this, thank you all once again, and now I request the co-chairperson of the committee, Shri Priya Kumarji, to address to all of you.
Thank you very much, sir. To Durgesh ji, who's the chairperson of the IBC, who's been a sort of personal inspiration on how to work in a focused manner. Mr. Hansraj Shubji, who's been here and who's very, very actively involved, and I'm sure everybody in the North knows him. To Gyan Mishra ji, who's come into the council newly from the Central Council member, from the Central Region, and to the Speaker of the Day, Mr. R.K. Bhutia. And the Secretary of the Committee, Rita. Thank you so much for organizing this program. So, welcome everybody. I'd just like to speak for a very few minutes before we actually hand over the mic to the rest. So, if I were to single out two things which are very important in any resolution process, the entire code, it's one person and one process. The person is undoubtedly the resolution professional. So in this ecosystem, which is like an aircraft, you have the IBBI, the IPA, the IU, the corporate debtor, the various creditors, the adjudicating authorities. If that's your aeroplane with the body, the wings, the tail, the RP is actually the man in the cockpit. He's the pilot and he's steering the ship. And the COC is actually the wind beneath the wings. So that's how the aircraft flies. Similarly, if I were to talk of the most important process, it's the process of resolution plan. See, everything else that you do as an RP is very peripheral, coincidentally getting the process right. And all processes are actually directed. Why do you do your valuation? Because you want to find the value, because you want to maximize value. Everything is finally directed towards the resolution plan. That's the first point I wanted to make. The second thing is, when you're looking at a resolution plan, what are the 3 P's that you look at? One, you look at the process. The process is the very linear code. That's my only, sort of advice to the RPs, is to stay absolutely linear to the code. Then there will be no issues of negligence, collusion, etc. and maintain the highest standards of integrity. The process for EOI is extremely well laid out in the code, right from your Form G, your prospective applicant criteria, to expression of interest, the detailed offer document, how somebody submits a resolution plan, the contents of a resolution plan, etc. So that's the first P, which is the process. The second, what is very interesting is, and that's where lectures like this help, is for us to understand the practice. Because it's an extremely new law. And all of us can't read everything and understand everything. Which is why I personally find that I often go through the recordings because I'm unable to sit through it during the time. But I find that, understanding a practice is very, very helpful. So how does an RP do it? If you go and search on the internet, you find enormous number of EOI documents which are available. So you try and build your own best practice EOI document. The third one is pronouncements. I think as far as this law is concerned, the two very good things is that every significant matter that came up before the Supreme Court has actually found its way back as a law. Whether it's Mobisa versus Kirusa versus Mobilox in the matter of dispute, or whether it is bank statements whether it is to be available or not, all the cases have somewhere 29A, which was a fallout of the Synergy Dure, everything has been enshrined into the law. Even in the matter of resolution plans, I think today a lot of emphasis you can place on judicial pronouncements, especially Supreme Court decisions. So, for example, there is one decision that says in Maharashtra Seamless that your resolution plan value can be lesser than your liquidation value. However, these kind of benefits, I don't think we should look at it. It should not be to game the system. So, which is where an RP is expected to exercise a lot more safeguards. Similarly, today in Binani, they had provided for interest during CIRP period. All of us seem to think that there is a block there. So today, what is the objective of the code? It's maximization of value. And coming back to my opening statement, who is the biggest person who can handle this is the RP. He's the fulcrum of the process, who's expected, once again, I must tell you, to be expected to be at the cutting edge of trust and integrity. What's the most important process? It's the resolution plan. So, this is one thing that actually makes a national difference. If I were to look at one more process in this country which has a national impact, it's your signing the statutory audit report. The only other equivalent, big decision, which can actually put somebody back on their feet is a resolution plan. With these few words, would like to commit the session to all of you. Thank you very much.
Thank you, Shilpaji. May I now request my other council colleague, Gyan Chandra Mistraji, who is also IEP and leading as a convener of one of the group for the insolvency and bankruptcy, to share his thoughts.
Thank you, very respected chairman of the committee, and of course the vice chairperson, Sri Priya Madam, and Sraj Chukji, very senior central council member, speaker of the today's session, R.K. Bhutta ji, secretary Rika Madam, and of course all the wonderful audience on the very important topic, resolution plan. And since I am also practicing as an insolvency professional, this topic is really very close to my heart. Resolution, as in addition to Sri Priya Madam, the basically object of the act is to maximize the wealth within the stipulated time. Timeliness is very important, that we have to observe certain times. And if we are not able to maximize the wealth of the enterprises for which we are undergoing, then somehow the object of the act is not met with. One more thing that I wanted to share with the learned audience, that this is up to the resolution professional, that he has to ensure that all the related objects are met out within the stipulated time frame as well as the stipulated responsibilities. So friends, it's always privilege to work with Durgesh Bhai, and since he has given this opportunity to interact with all of you, I will not take much time. The onus rests always, well said by Sri Priya Madam, like the pilot of the cockpit. So we have to ensure that all the related objects are met out. Thank you, Durgesh Bhai, for giving the opportunity to interact with the members, and good luck and happy learning to all of you. Thank you.
Thank you, Gyanji. Now I hand over the charge to the moderator of today's VCM, Sri Hansraj Chubji, to take it forward.
Thank you, Chairman Durgesh Kabra ji.
Come on, this side. Come on.
Thank you very much, Durgesh Kabra ji, the Chairman of the committee, the co-chairperson around us, Priya Kumar, my colleague in the council, Gyan Misra ji, the learned speaker of the day, R.K. Bhutta ji, the knowledge he'll be making us through, the subject which has brought us a change in the economic and the commercial law. It's of the high importance. And globally, if we brought out, the World Bank has given us a better ranking because of the certain law. One amongst this law also. I'll share the brief of our Bhuttaji also, because he is a very learned speaker around us, around 42 years of the experience in the profession, and as an insolvency professional, he has handled more than 25 cases as an IRP, and outstanding dues majorly ranging from the 200 crores to the 2000 crores registered with the IBBI and successfully resolved and revived the insolvent companies also. He has handled cases under liquidations of 5 companies and successfully carried out the dissolution of the companies. He possesses the qualification other than the chartered accountancy, a bachelor of the law also, Bachelor of the Commerce, and mainly covering the practices in a different areas, including arbitration proceedings, corporate advisory services, and many others. And he has contributed as a co-author in the handbook on the resolution plan under the IBC, a publication of the ICI. Friends, with these words, I welcome our R.K. Bhutta ji and welcome each and every participants also, and the secretary around us, S. Rita, she is the coordinator for the program. With these words, I request R.K. Bhutta ji to start his deliberation, and whenever the question comes in, we'll start questioning also. Bhutta ji, over to you. Sir, over to you.
You hear me? Good afternoon. This is a very special subject which we are gathered to listen to, and which has a very wide impact in total IBC. We had seen from the day one that the impact of the insolvency and bankruptcy code is a very great extent. It's been affecting not only the corporate bodies, but also to a great extent to every commercial organization in the country. Though he may not be participating in the resolution plan, or he may not be participating into any other activity, but he is always keen to know what is happening in this particular sector. The reason being that he may have someone where he has to put a claim. I would like to start with my presentation so that we can go step by step, that we are covering most of the part in our today's session. With home session next की 1008 माई भगवान की जय. Respected chairman, dignitaries and respected fellow members, Jai Junaid. This session is dedicated to Azadi Ka Mahotsav. This Mahotsav is awakening the nation, fulfilling the dreams of good governance and development. I have chosen this to be dedicated to the Azadi Ka Mahotsav with a very specific reason, that this is in the direction of the good governance And the development in the sector is key factor for total all-round development in the country. So this is the year in which we should speak about Azadi Ka Amrit Mahotsav. At the same time, we should know that how it is going to be affecting our good governance and development throughout the country. Before I go to the present full-fledged onto the resolution plan, I thought it is better to give you a picture that how many companies have come into the insolvency, what happened to that, and how is it really affecting the total picture. The corporate world is quite large. If we see that how many total companies come into the CRP process is 5,000 companies. The 5,000 companies is not a big number. The number is that it is affecting all the other corporates who are affected by these 5,000 companies. We have seen that very beginning that 20 companies came into picture, which are large companies, large corporates. Everybody was aware how these companies will get resolved. But slowly over a period of time, the resolution came out. Somewhere in the good value, somewhere value more than the what was expected, and the real money came into picture. Money was realized with the banks. Now out of 5,000, we see that 3,400 are closed. It's quite a big number. It's not a small number. The 3,400 companies are closed. And ongoing are 1,852. 1,852 cases. It looks only 1,852 cases. But for every case, there is more than 5 litigations, 6 litigations, 7 litigations at every stage, NCLT stage, and NCLAT stage or a Supreme Court. So the number of litigations in 1,800 cases are not less than 10,000 cases, where the judiciary is burdened with more number of cases every day in and out. We have to see that how the number of litigations get reduced in the process, because the process which we are going to see in that we have to work out ourselves, self-regulatory body, to see that the number of cases and litigations are reduced, so that the burden on the judiciary is less, and we are able to get the timely decisions of the appropriate authorities at appropriate time to salvage the value of the corporate assets. Now we have seen that out of 5,000 companies, we have closed 3,400 companies. If we have closed 3,400 companies, how many have gone to litigation? How many have gone to the liquidation? 47% companies are closed by the liquidation, and only 14% has approval of plans. Only 14%. Now these numbers is very small. The whole purpose of bringing the IBC is to see that we have good number of resolution plan, and we have been able to salvage the company to continue their business operations, and they are remain as economically viable. Here we see that 47% of companies are going into liquidation. This is a quite large number. So we have a progress to go from reducing the number of companies going to the liquidation to see that number of companies are going for approval of plan. Now, how it can happen is that if the processes are improved, if the economic values are improved, if the timelines are improved, and we see a value which is possible. Now today, we are not talking of an NPA which are quite old and the assets have already been out from the corporate, but now these NPAs are not very old, maybe 6 months or 1 year, and immediately it comes to the CIRP. Possibility is that more resolution plan will come in future. I'm trying to read out something which has been very aptly said by the Sri Rajeshwar Rao, as the Deputy Governor of Reserve Bank of India, in his speech on International Research Conference, which is giving what is actually the essence of the insolvency. So I'm just reading out what he said and not adding anything of my own, so that it will give you a very clear picture that what we are talking about as an essence of insolvency. For any lender, the credit risk, possibility of not receiving the timely repayment of the contracted amount, or of the counterparty not honoring its obligation in respect of a credit contract, constitutes a significant risk that needs to be covered by maintaining adequate capital and risk provisions. This is a burden on the banks. In principle, a borrower defaults when he is either unable to pay his creditor because of inadequate cash flows, from his business or market values of his assets falls below the value of his liabilities, which hinders his capabilities to liquidate his assets and pay out the creditors to ensure that no default takes place. This is a very lenient cases where the default are because of the reduction in the asset value. In such a situation, the borrower is said to have become insolvent. Unfortunately, this is very important. Unfortunately, in real world situation, it is not easy to ascertain whether a borrower is becoming insolvent till the time the default occurs. So we come to know that the party is insolvent, the corporate is insolvent only when it is declared as an NPA. Mostly by then, the marketable value of the assets of the borrower would have already fallen below the liabilities. The liabilities of that borrower are the assets of the lender. The inability of the borrower to pay its liability will reduce the value of the assets of the lender, thereby impacting their ability to repay their creditors. So it's an exchange fall. If the borrower fails, it is the banker has funded it. The banker may have a difficulty. The ratio may change. It will impact on the capital market. It will impact on the secondary market. All this will have the cycle impact. We reduce the value of the asset of lender, thereby impacting their ability to pay their credit, which primarily includes depositors in the case of banks. This is the main reason why RBI is interested in the timely resolution of stressed assets by the regulated entities. Even where the lender is not a bank, the interconnectedness of financial system could lead to second order effect that would adversely impact the system. These messages give that there are timeliness is very, very important for corporate, for banks, or for the capital market and secondary market. Once a borrower becomes insolvent, the natural instinct of a creditor is to cut down their losses by rushing for the biggest possible piece of remaining high of marketable assets of the concerned borrower. But naturally, he has to run and see that whatever he can see. How we also need to bear in mind the fact that a state of insolvency does not mean the future prospects of the borrower are non-existent. A judicious rebalancing of debt would suffice to bring it back on track. The financial stress is extremely acute. Almost always a going concern should be more valuable to a creditor than liquidated company. This context, the comprehensive assumes same knowledge. So this is the way the whole code has been conceived, and then we want that corporates to succeed, the resolution plans to succeed, so that at least that there is a judicial balance between that and the chances of failure are less. Now, this we are comparing what is the paradigm shift under the IBC. What was the earlier and what is now. Now we are coming to an IBC. The sea change, creditor in control, the owner is not in control. As soon as the IC announces the order that the corporate is admitted to insolvency, the financial institution, banks, financial creditor takes the control of the corporate. The insertion of Section 29 is very vital that provided further fillip to the nation that an insolvent debtor has to be protected from. Because earlier the same management used to continue in the management and was not possible for the corporate fund, not possible for bankers to realize their debts. Now the 29A comes in, person pays all the NPA and he is not in a position to serve his NPA, then he will not be entitled to become a solution. Code also established Committee of Credit as a public institution with a paramount responsibility of ensuring. The Supreme Court has given a high standard and Committee of Credit has given a high power that the commercial wisdom of the COC is the highest. The resolution plan which has been approved by Committee of Creditors is having the highest judicious value, commercial value to know what should be the resolution plan and what should be the value. More than the liquidation value or less than liquidation value is not important. Not be the judicious application of mine by Committee of Creditors rather than anybody else who is not involved, may not be not even for the adjudicating authority to question the commercial wisdom of the Committee of the Creditors. So they are working as a public institution with a paramount responsibility. The code also enhanced the negotiating power of the operational creditor, allowing them also to make applications of operational data for reform. because operational creditor can also file an application for insolvency, admission to the insolvency. The reason being, because of this fear, the corporate body will ensure that they are not a defaulter and we should make additional creditors. Threat of insolvency. This is a very big shift from the older version to the. We are bringing out some very important aspects of what is efficiency, what is efficient insolvency promised. There should be it should prioritize going concern. The whole resolution plan, purpose of resolution plan and whole period of insolvency is based on that we should salvage the going concern. So prioritize the going concern, status over the liquidation. We don't want the company to on the day one. We've given us some lifetime, given a 6 months period, 9 months period, a resolution applicant come in, we can resolve, and the going concern can be made into a good company. It should force the creditors to come together and work out a resolution plan. It forces the creditors to come together. Now the classes of the creditors are different bankers, maybe a different type. Creditor who is funded and corporate. These all will have to work together. They have to come up with one committee of creditors and resolve that. And the resolution plan, which is passed by 66%, will be able to see the daylight of the approval of the authority. All the creditors are come together to work. It should be time bound. We'll be talking the time bound on many slides. The reason being, the most important aspect of the insolvency that everything should be done in a time bound manner. It should ensure a time bound resolution so that value deterioration for the creditor and insolvent topic of the questionable transactions. The code has already provided the questionable transaction and defines these are the questionable transactions. And if the promoter or the management is entered into those transactions, resolution professional is required to report to the adjudicating authority that there are questionable. Effective resolution regime should protect the majority. Reason being that they have a pure part to have passed the resolution plan 66. Maybe going a little faster, the reason being that this topic is too big, the area to be covered are huge, and we may be able to touch as much possible that I will be able to. Giving a slightly a different version than in how the people perceive and how the people could see the success. What are the pillars of the success of the resolution plan? I'm taking out something from the Prime Minister Narendra Modi has said. Speaking at the last event in Tokyo, actually, Prime Minister Narendra Modi had said India will work with other members to build an inclusive and flexible IPEF, Indo-Pacific Economic Framework, the declaration of collective will to make the region an engine of global economic growth. I believe that there should be three main pillars of the resilient supply chain. What are these? Trust, transparency, guidelines. Now, these are not only three pillars for the purpose of an IPEF. These are the three pillars. You will be seeing the three pillars are good enough, good for corporate, good for resolution plan, and good for success of any project. You have trust. The committee of creditors should trust each other. There should be transparency of what is happening in the resolution plan. If there are more than one resolution plan, they should be transparently to find out what is the maximization of the value possible. And then all this should be done within the timelines prescribed under the code. So these three pillars are equally applicable for the success of the resolution. Slightly more into that, what the RBI is looking at it to improve the IBC or the insolvency processes. Because if there is a secondary market available for the corporate loans, then it is possible that the more number of resolutions can take place. Again, I am giving the same thing from Mr. Sri Rajeshwar Rao, Deputy Governor, Reserve Bank of India, what he said on April 30th, 2022. Deepening of the credit risk market in India is necessary condition to take the financial system to the next level of sophistication. RBI has been taking many steps toward this in recent years. The guidelines covering the transfer of loan exposures have been reviewed and harmonized across lending institutions. This is very, very important from the point of view of the IBC resolution professional and the person who is giving a resolution applicant, that the many financial institutions can transfer their loans exposure have been reviewed and harmonized so that even the ARCs can in a position to bid for the as a resolution applicant. Secondary market for stress loan has been thrown open to transferees who are not regulated by RBI. Recommendations of the Committee on the Development of Housing Finance. Chairperson and Dr. Harsh Vardhan, the Task Force on the Development of Secondary Market for Corporate Loans. Chairperson CPE and Manoharan are being implemented in phases. One of the major recommendations of the letter, the self-regulatory organization for the secondary market for corporate loans have been implemented with the establishment of the Secondary Loan Market Association. RBI is also exploring further avenues to deepen the credit risk market by exploring the feasibility of allowing additional type of securitization. So these are the steps that what we can foresee in the future, which is going to be taking place over a period of time, which will be definitely supporting and enhancing the market exposure so that more number of people can take advantage and can put their resolution plan. So what we are looking for is how to increase more number of companies in the resolution plan vis-a-vis the reduction in the number of companies to be liquidated. Now we are starting with the main thing that how the resolution plan and what is the resolution plan, how the resolution plan to see the daylight at the end of the approval. Resolution plan is defined, which it is not that open for anybody to find out to just guess what is the resolution plan. Resolution plan means proposed by a resolution applicant. The person is defined as a resolution applicant. For insolvency resolution of a corporate debtor is a going concern. In accordance with Part 2, it has been further clarified by the explanation. Resolution plan may include provision for restructuring of corporate debtor, including by amalgamation. So this is the resolution plan is provided by a resolution applicant and is going to give a restructuring of the corporate debtor, including by way of amalgamation. So you have so many options available to you that how to restructure corporate debtor, how to restructure the loan, how to restructure and do as much as possible for the purpose so that you can increase the value vis-a-vis your own operations and by the taking the new company into your fold. The same thing I'm repeating it in the other form that what it is not. The resolution plan is not a sale, but a resolution of a corporate debtor than a going concern. We want the company to continue as a going concern. We are not selling one by one asset of the corporate debtor, like in liquidation. In liquidation, we have a number of assets, and each asset can be sold separately to a different person. Each asset will have different value. Whereas when we come to the resolution plan, there is a plan which is going to keep the concern, the going concern, which is the most important. To continue the business, continue with the employees, continue with all the facilities and assets which is going to create an economic value. The going concern is the importance. It is not a process of a sale. The resolution is not an auction. Feasibility and viability of children are not amenable to bidding or auction. Here there is no question of bidding or an auction. You are going with the process of the resolution plan where you are seeing how it is going to be increasing the economic value, how you are going to run the corporate as a going concern, which is it requires application of mind by financial creator. Resolution is not recovery. Many times this question has been addressed at various forums at NCLT, NCLT, and the Supreme Court that resolution is not a process of a recovery. If you want to recover, there are other means available. You can file a suit or you can go to other recovery processes. But a resolution plan is not a recovery process. For the financial creditor, there is a plan which is giving them how to. And from the continuation of the going concern, the recovery will take place. The recovery is also the objective. recovery is also, but it is not a prime objective. It is a subsidiary objective, right? So that the recovery should take place. At the same time, the company should also continue to operate. Recovery bleeds the corporate debtor to death. Resolution endeavors to keep the corporate debtor alive. IBC prohibits and discourages recovery in several ways. Resolution is not a liquidation. Again, you have to the liquidation is inequitable as it considers the claim of a set of stakeholders only if there is a surplus after satisfying the claim of stakeholders fully. IBC therefore does not allow liquidation. Digital finance. Now, in a liquidation, the process is already defined as Chapter 53, how the liquidation has to take place instead of the stakeholders. Whereas when you come to an resolution plan, you can provide a different amount of interest, which is key for the purpose of the operation, continuity of the operations of the company. So the differentiation has been very clearly categorized: the liquidation and resolution plan. Once the resolution plan phase, then you go for liquidation, not the liquidation and the objectives for realizing the amount. Resolution plan is a proposed resolution applicant providing revival plan to ensure continuity of the plan provides for a continuance of workers employees in the employment additional generated by employment. Here, case of insolvency is in addition to the insolvency, the workers are not the workers' job is not terminated. It is not amounting to termination. Worker continues to work as worker. Only the management changes, the directors are suspended. The workers are not suspended. The resolution has to take into account how is going to use the employees and how the employment will continue. For the biggest that Jet Airways, where so many employees, they continue their operations, they are continuing with the company. The resolution plan is provided how the Jet Airways and how the Air India is going to continue with their operation even after the change of the management. The insolvency is a process in which business is continuing, not discontinued, or management is not suspended. Employees will continue, and you see that how the employees can continue their operation, continue their employment. The plan provides to explore the company's history of the business, provide for the induct required fund. Now, it is very important in the resolution plan here requires that he has to induct the funds, the debt structuring and capital refurbishing of land and machinery. The objective of debt restructuring is to satisfy the secondary lenders, secure lenders through settlement terms. So here it is a combination of three factors. That you are continuing with the employees, you are continuing with the vendors, you are continuing with the operations of the company, you are continuing with the available resources. You are allowed to continue with the water and power, which is necessary for the continuation of the business. You're working on a resolution which should give a higher value of the economic value of the. So when you're preparing a resolution plan, you have to ensure that all these factors are considered, which is giving a good value for the. Resolution applicant provides to take over the management of company. Here, what happens is the whole management cannot have that managerial skill, and therefore you have to incur losses. But the resolution applicant can bring in his local management, or you can have a national or international management in the company and bring the professional for the success of the corporate body. Resolution applicant not abide for the commitment to infuse the funds. The resolution applicant will provide the financials and how the revised structure is going to be financially viable and how he is going to impact the traditional fund for the success of the company. Resolution applicant normally has the adequate research to impact. Resolution applicant may require the business of the corporate data and merge with the existing business. It cannot be growth of the operation. So here is the first phase where we are just discussing that what is the resolution plan. Resolution plan is the process in which he is bringing out all the aspects of the aspects of the corporate body is going to continue. Is releasing the security, is paying the creditors, is bringing the additional funds, is bringing so many things along with the resolution plan, so that the resolution plan, when the resolution gets approved, the various stages. What we have said earlier in these earlier two slides, now what we are seeing is what is within a regulation, which is that what are the measures for the regulation. We did it in a different format, but this is what the regulations that which provides for the resolution plan and provide for the measures for the resolution. So these are the combination of these measures which you can bring into the resolution plan to become a successful resolution. Transfer of all part of the access of property to one or more persons. Sell of all or part of the assets that is subject to any security interest or law. Here we are talking about how much you can sell the asset. If the resolution can have the combination, can have combination of part sale of the asset. He get a combination of the reveal of the securities of the asset, and whereby he can generate some funds. The assets which are non-core asset, he can generate the funds. Put the generated funds into the operations of the company. Restructuring of the corporate data by way of a larger amalgamation will deal with this particular aspect in line. Right. When we come to how the merger, demerger amalgamations are going to be beneficial for restructuring or structuring of the resolution plan. Very important that you can have all the combinations possible to get the best out of all this without going into the process of merger and demerger, which normally takes quite a long time. Whereas in the case of the resolution plan, you can structure the merger and demerger in your resolution plan itself so that you can work it well. Potential acquisition of shares of the corporate data, merger or consolidation of corporate data with one or more persons. Consideration of delisting, which is optional. You want to delist the company, you can delist, or you can continue with the listing as per the SEBI guidelines for the insolvent company. With your share of equity is going less than 75%, you are allowed to bring it to the 75%. It depends upon the economics of the listing and delisting. Satisfaction or modification of anything. Curing or waiving any breach of any debt due to corporate paper. Reduction in amount payable to the creditor. Definitely, this is an object. The reason is the company has failed to pay the financial creditor, and if the financial creditors have been settled with a lesser amount, most viable, and the creditors will accept the haircut so that the resolution plan can. A maturity date for change in the interest rates. Amendment of a constitution. There are so many times there are constitutional documents, all the shareholders agreement, all the document where the rights and liabilities, rights and the structuring of the debt and equity are incorporated. Such documents can be override, and without changing those documents, the new resolution applicant can have his own terms, and if it is accepted, he can continue with corporate data without changing the or satisfying the terms of security of corporate data, property securities, exchange for claims or interest or another appropriate purpose, change in portfolio of goods or services, change in technology or approvals from centers. These are all measures which may depend on the size of the corporate body. So all the measures for the structuring the resolution. We have seen what are the options available to him. What we are doing is we are we are using that one or two examples here to see that how you can design the product to suit your own requirement. This will give you a little idea, but in a practical level, whenever you have an corporate body, if you have these options available, you can keep on changing and design your own product which will be suitable for the POC, financial creditors, and at the corporate body. Regulation 37 has provided various tools for the financial product designer to mix various measures in their different combinations to structure the regulation products. Transfer of all of the assets to anyone during insolvency, there are no regulations for the sale of assets either. Without following these provisions of the option, resolution plan will be working. So, buying part or all assets. Here, when the resolution plan is providing for sale of some part of the asset, or some division, or some particular segment or particular technology, he is free to do that depending on if it is using that process. He is using that for the purpose of the resolution. He is working out one other more. He wants to sell up the asset. He don't need to do the process of selling the asset, what is required to be done under the liquidation. He can have the resolution. That will sell the asset at a predefined price or a negotiated price depending upon depending upon the size and the technology of the asset. Use that money for the. There's a very big advantage for the resolution applicant for his own purpose. Restructuring of the corporate supply of the merger. I'll just give you the example of what happened. In case of a large city, there are a number of businesses. In one city, many real estate projects, under one city, many real estate projects are facing problems because they are and different locations having different values under the banner of one city. Now, this is the example where you have a real estate company. A real estate company is having more than 15, 20 projects at a different location. And each location, the completion is at a different state. The values of the project is different, and the claims of the financial creditors are different projects and different creditors funded those projects. So, under such complicated situation where you intend to come up with a resolution plan, it will be difficult to get a company as a single person who is willing to take all the projects in one go. What you can do is that you can have the demerger of the company, demerger of the particular plant, demerger of the particular state, and demerger so that the different value can be established, and there will be some buyer to buy that particular state and a particular project. This is very good where you can use the merger or amalgamation and demerger to find out how it will your state project. PD can demerge its project under different subsidiaries but each project will be sellable and will realize the best possible value. This will increase the total economic value of all the projects are not merged individually. The project which is sellable can be demerged. Substantial share of the CD can be acquired for merger and acquisition, consolidation of the CD, running company of one or more person. These two case basis debit debt corporate structuring can be created for the resolution plan by master. Insolvency in USA were said to be General Motors. General Motors USA were resolved by a demerger of the General Motors to four companies. So, such a big company, sure, all over the US had so many departments, so many operations, so many branches, so many things. It was divided into four companies. The four demerged companies were brought to a resolution plan. In India and Indian context, builders and technology are facing the problem. You will find that if you go through the builders, the problem is that they are not able to get because they are not doing the demerger. If they do a demerger, each project will be so there may be a project in which the number of the buyers in that particular project may be a number, where in some of the projects the number of buyers are different. So if the different buyers having a different interest, it is not possible to sell both the project buyer to a 1% buy it also. But if the two projects are sold differently, potential creditors are different, their interests are different, the securities are different. You can work out a resolution where it is possible to have different emerged institutions and sell the project to a different people. Now we have seen we are just giving what is the resolution plan, what is the definition of the resolution plan, what are the ingredients and how the resolution plan can be here. What are the means available for structuring the resolution plan. Now we are going slightly different. We are coming to the memorandum of information. The memorandum of information is the basic document providing the information of the corporate body. And these provisions are there. What are the information? Your legal information, corporate information, all this which is primarily required for the purpose of resolution applicant to go through that so that he can make up his mind that what he intend, what he is going to get, or what is the assets and liabilities, or what are the different legal aspects which are there in the corporate body. So he should put his hand into that corporate body or not. The memorandum of information is an important document something the resolution. Various aspects have to be analyzed. This section will be held to deal with it. The section 29 is duty of the resolution professional prepare the information amongst institution members and resolution applicant. Time and manner of submission of information memorandum and content of the same is provided. I'm not dealing with that. I'm not going into each and every what is provided. It is very list is provided. What are the information to be listed in the. Again, something more than that. Then what is the legal sanctity of information memorandum? Who has prepared it? Who is liable for it? What is the legal sanctity of the information memorandum? We have seen that information memorandum, every company, every corporate body, even the RB has to prepare the information memorandum and give it to the COC. COC will have a look at it and then give. This will be this information, what is there in the information memorandum, put into the data room for the purpose of the resolution to have a look at it. He will be making his resolution plan based on the information memorandum, information in the information memorandum. Now, what is the legal sanctity of the information memorandum? RP is not a manager or a key managerial person as per the Companies Act. RP has no role in verifying or providing authenticity to the information or documents contained in the information memorandum. Under section 25(2)(g), duty of resolution to prepare an information memorandum according to. He is only to prepare. What he is doing, he is collecting all the information, meaning thereby that he has to collect the financial information as per the balance sheet, he has to collect financial information as per books of account, and he has to compile that information into or put it into prepare the information memorandum or to check it. If there is something wrong in the information, which is already in the books of account, or if we don't have any information now, in many cases, out of 5,000 cases, you will find that in 2,000 cases, the corporate data has not filed their balance sheet till last. If accounts are not prepared, accounts are not available, information is not available. RP has no time, RP has to only prepare information and put it in there. If you don't have information, he can't do anything. Resolution shall prepare in such form and manner continued. It may be specified by the board for formulating a resolution plan. There is no duty casted upon the resolution professional to prepare the authenticity, accuracy, or correctness of the information contained in the information memorandum. Any times information is not available, PD has not filed the document with the ROC. Resolution profession cannot be held liable, responsible for the accuracy or authenticity of the information. It further added that type is an information document, not a letter of offer or a prospectus as defined in the Companies Act. Use information in information memorandum at own risk. Corporate data or resolution professional will liable for the content of the information. He is liable to the action that he has to prepare the document. He has to see that all the information is put into that particular document called an information to the resolution applicant for the purpose of his own verification. But if there is some information where he says that the asset A or B or C is there, which is recorded in his balance sheet, but it is not there, he may not be able to certify that these are accurate or these are is certainly finds that the all assets will be there. There may be a contingent liability. I'm not knowing within a couple of days, but if it is not reported, we may not be able to report contingent liability. So there are many aspects which are not possible for the resolution officer to know about it. At the same time, he is just only to prepare it, put it across in a data room, and say that he is compliant with the conditions of the preparation of information memorandum, not liable for the accuracy, authenticity of the information. Resolution applicant is using this information, his own risk. He should have his own verification to know that to what extent he can allow this information, and he can have his own examination or due diligence for the purpose of procedure. So we have got the two chapters we have done is regarding first the resolution plan. What is the meaning of the resolution plan and what is the information available for preparation of the resolution. Now the resolution professional is putting in inviting expression of interest. It's the process which is already prescribed. The code is prescribing all these, what is the process to be followed. Like in a liquidation, you have to follow the process of the auction. Similarly, in the resolution, expression of interest, that the people at large should know that this particular company under the insolvency and the invitations are called for the expression of interest. Those who are interested, they should submit that they are interested in particular. Legally, the process can go further. Therefore, it is a duty customer resolution professional under section 25(2)(h) to invite expression of interest from the prospective resolution applicant. He just can't say that I have not advertised and then still I am waiting for the resolution. So he has to put an advertisement under the public newspaper under section 25(2)(h), give the information that is being mentioned in the regulation, that all this information has been available to the public at large, so that they know that this particular company has an insolvency and the expression of interest are invited and they can submit the. Even in this particular, this is very clearly provided that when the expression of interest is called for, the conditions are also mentioned. That what are the criteria, minimum criteria, laid down in the resolution, laid down in the advertisement of expression of interest. What should be the size of the corporate body? What should be the asset capital? What should be the net asset of the who are eligible to become a before. The criteria will be laid down by resolution with the approval of the city. In regard to the complexity and scale of operation, it also as a part of the advertisement. Here, the official resolution professional shall publish brief particular expression of interest of schedule at the earliest 2 newspapers after the 25th day from there. Here the form G is also prescribed. So here I will request the resolution professional as some additional information. Give a little para on the what is the asset or what is the that every person who is reading newspaper, reading the form G, he has a little idea of which the particular company is into what segment, what sector, and what size, so that if they want to express the interest, they are in a position to. So this is something what we are providing is more than form G. I think there should be any problem in the additional information more than a form G. Form G is there. You provide all the information as per the form G. It has given everything. But I think it seems that because many times when the form G is published, people don't know by the name of the company that this company is into which particular sector and segment, with the size of the company. They become difficult for them to get to the resolution professional and make an application for expression. Form G will provide that, within how much time the particular expression will be submitted to the resolution professional. When expression is not submitted within a specified time, the person will lose his right to vote in a resolution. It is very unconditional. Now, when he is putting an expression of interest, it should be unconditional. undertaking by the prospective resolution applicant that it meets with the criteria. Here there are criteria what is given in Form G, so that he has to go through the Form G and see that he is compliant with the Form G and he is competent to apply for the resolution plan, and therefore is making unconditional application expressing his expression of interest. An undertaking by the prospective resolution. He has to further give an undertaking prospective applicant that does not suffer from the irregularities under Section 29A to the extent that they give it. The 29A is the list of the disqualifications, or the list that where if the person is not capable, a person not clearing those criteria, will not be able to make an application. We'll deal with the provisions of what are the provisions, eligibility criteria under section. An undertaking by the prospective resolution applicant that shall intimate the RP, both with it becomes ineligible at any time during this year. We are talking about is the expression of interest. When we are talking about expression, the 29A. Now he is saying that he has to give an undertaking by the resolution that it shall intimate the RP, both with if it becomes ineligible at any time. This is of a very practical approach. In one of my cases on the resolution plan was prepared, resolution was approved, resolution was filed with the adjudicating authority. And due to some reason, the matter was going into NCLAT and in Supreme Court. During this period, which is after the CIP, after the order of the Supreme Court, the resolution applicant becomes an NPA. So he has to declare that he is from NPA. And then we have to file that he has become NPA, and the resolution plan which was there has to be rejected, and the company has gone into the liquidation. An undertaking by the prospective resolution that every information and record provided is true and correct. In discovery of any false information or record, any time under application to submit a resolution. If we go to the history of the number of the cases, litigations, and many cases, and we find that information provided by an applicant. The applicant that the information available of the project was not available. There are many combinations which are there. Now here, this particular point I am just emphasizing is that you have to be very clear about this particular aspect so that you can reduce the number of litigation in this. If you be very clear cut that everything complies, if your compliance is not in question, then the number of litigation will. An undertaking by the prospective resolution applicant to the effect that it shall maintain confidentiality of the information to cause an undue gain or undue loss to itself or any other person. Confidentiality is very, very important. Confidential information, confidential information is very important. The corporate body can have important information which are very confidential, are not available to the competitors or outside market, outside bodies. Therefore, he has to ensure that not part of the come to know because of the what he has to perform, the resolution applicant has to perform in terms of the giving his undertaking and substantiating that he is a good resolution. Has to be one of the things that he is eligible for resolution applicant criteria which should not. Criteria to become resolution applicant has laid down this. Many times he used to lay down what the criteria for the resolution. A eligible person are criteria. Second criteria of eligibility is that he has to satisfy the condition. is a very crucial section. A lot of heated arguments in litigations. Here I am not getting into all that, just for the simplicity that we are more concentrating on subject of a resolution plan and approval of a resolution. This being one of the important issues, I'm just categorizing and just putting it one of the basic things. But it's simply what are the section 29A is an undischarged insolvent. Normally there in all the cases we willful defaulted, definitely will be. Third, at the time of submission of resolution plan, the person is a promoter or classified as a non-performing asset. Period of 1 year has elapsed. Disqualification was removed. This is very crucial because many are applicable because if the company, the corporate bodies, the promoter is an IP of the corporate bodies. 1 year has passed, he will not be able to apply for his own company where he was under the management and a promoter. If the removed entity is removed, then he will be able to remove entity will be of the outstanding dues, if any limit of has been convicted for any offence punishable with imprisonment. Disqualification will not apply after the expiry of 2 years. Is disqualified to act as a director of the company. Is prohibited by the Securities and Exchange Board of it. Has been a promoter of cooperative in which a preferential transaction, undervalue transaction, fraudulent credit transaction, or fraudulent transaction has taken place. Has executed a guarantee in favor of creditor and creditors against which an application for the creditor has been admitted under the floor and such guarantee both by the creditor and creditor. Subject to disability corresponding to clause by the restriction of but it is not in India. Outside India also they feel that the same conditions will be applicable and then they will be. These conditions are applicable for selected person. Applicant. So we have come across that now. What can be the resolution plan? What are the information available in that? Who can be a resolution applicant? If you become a resolution applicant, what he will do? A connected person also not from party. The related party. This is also one of the amendment to section 248 was made, which specifically discusses the applicability for section 8. The resolution should be registered with MSME and certificate. If he is holding an MSME certificate, certificate, and he wants to become the resolution applicant, section is provided in section 248, and he can make an application, resolution applicant, he can become resolution applicant for such a corporate law. The terms and conditions which were applied that he can become a resolution applicant. Now, what we are looking into that, what are the terms and conditions provided by the corporate body? So then, when he makes a resolution, he should be abiding with all these conditions, and the resolution plan will be examined on the basis of these conditions. He is successful only on the basis of them with the RFRD, and then he will be able to be a finally successful resolution, defendant resolution. So this particular document is very, very important from the point of view of the corporate body, COC, resolution profit and loss. All the resolution profit and corporate body and the COC will ensure that if they want to stay has been specified in RFRD well in advance. So the resolution applicant is making his plan and is putting it. But this is within these guidelines and within those terms and conditions, so that his resolution plan should not fail because this is not as per the RFRP provided to them. The resolution plan, this is a resolution plan process. After the receipt of the letter of expression of interest, we shall verify that the resolution applicant is satisfied all requirement to provide and is also in compliance with the resolution. After being satisfied, after we issue a letter to the RA that his candidature is approved, resolution applicant is called upon to submit this in terms and conditions stated in our document. This is the RFRP document, which is the most crucial document. It was as a resolution professional to the resolution applicant. The RFRP document is before he is resolution professional, handed over to the resolution applicant. He gets it cleared from COC. The COC also has gone through this and they are agreed to the terms and conditions mentioned in our RFRP. The RFRP document becomes approved by the COC and handed over by RFRP to RFRP. Resolution applicant to agree to the terms of RFRP to submit resolution. A resolution applicant has to agree with the application. His resolution will be based as per the terms of the resolution, as per the terms of RFRP. Document of RFRP is a core basic document of processing resolution plan. What RFRP contains? I'm here giving a very heading something. If somebody is interested in getting into the more detail, we take every full paras on each and every item that is available in handbook. So I'm not repeating the same thing here, but I'm just giving the main content of the RFRP so that he has to ensure that RFRP document is having all the information. RFRP document to contain the following. RFRP, the access to IM and data. But access to IM and data is very crucial where he provide the information, the financial information. Up to what extent, to what level the information will be available will be provided in that. The balance sheet will be there, target will be there, account will be there, the fixed asset register will be there, original document, all the copies of the document, certified copies of the document, of the asset, the inspections carried out by the audit reports of data audit report. So what are the reports and other things which are possible for the regulator to provide? He will provide it in a term so that when the person he has gone through there, maybe a positive report, negative report, he is aware of that what are the assets, so that he can make his own judgment that what is going to do today. Many times he is not in a position to know what are the good debtors, what are the good loan terms, other assets. That way he have the resolution professional and be able to give to some extent possible that these are the report or the due diligence can be carried out by the resolution applicant in case if he intends to do so. So verification of data from document is the process where he gives all the information and provide that if he wants to have a site visit, he can have a site visit to have the inspection of it as well. To what extent it will be possible? To what extent he will be able to go? To what extent he will be able to get into the details of the every action? Be written in the process document. This, not beyond that. Rules for examination and evaluation post resolution. The para will contain the processes of evaluation process of the resolution. If the resolution, if we give the corporate body as a decision, 2 applicants or 3 applicants, all the resolution will be evaluated on a particular valuation scale. And valuation scale will be provided. What is the valuation scale which is going to be adopted by the COC to judge the resolution plan? If the resolution plan is to be accepted, it should carry more than 15 marks or 40 marks or 50 marks, depending upon the whatever the evaluation processing criteria decided by the COC is to be important, which should be known to the resolution applicant. So he is aware that how the resolution is going to be evaluated so that he can have the resolution plan is built up accordingly. Rights to amend RFRP. Rights to amend RFRP, the COC has a right to amend RFRP, right to verify the resolution plan, right to disqualify except for election. So these are the rights which is preserved. We can write up maintained by the COC in case they want to amend resolution plan, or the right to verify. Because there may be so many things where the resolution plan they have written. In case of the RP or if he wants to verify, they have a right to verify the resolution. Right to disqualify, reject all or any of the resolution plan. Terms of preparation and submission of resolution. Negotiation process. This is a negotiation process has to be stated when in advance of how we do it. It is going to be one-to-one negotiation. It is going to be negotiations. You open bid, it should be a Swiss bid. So all the process, whatever they want to do it should be recorded. And then it should not happen that, that because this is not specified and if some process has been done, then it will be a question by the resolution applicant that this was not mentioned. So to that extent, the litigation can be reduced if the negotiation processes are clarified and the negotiation has happened in the same way, the transfer of litigation will get reduced. Bank guarantee, EMB to submit. The resolution applicant is to provide a bank guarantee for the statement that he will continue to become a he has to submit the EMB that if the resolution plan is approved by the adjudication authority, he has the EMB will continue to be with the user. The performance guarantee also will be structured out around what are the performance that he will face to perform according to the resolution plan. His performance guarantee will be invoked. The resolution guarantee has to the provisions of IBC. He has to comply that the IBC provisions are complied with. Yes, we want to take that IBC provisions are complied with. Process of arrangement of series in the date of approval of COC, the date of order of this particular part is not mentioned in the form. But it is clear from the practical point of view that if the CD has approved the if the COC has approved the resolution plan, but adjudicating authority is not yet approved, it will be 1 month to 6 months or 1 year or 2 years, depending upon the applications of the litigation which are going on at the NCLT and NCLT level. This period, how the corporate body will be. Resolution plan approved by COC but not approved by the funding during the period. If he under the management, if the corporate body will do it, retain, there are going to be some expenses being incurred, which will have to be provided by the COC or by the AA. If the resolution has been approved, the resolution RFRP should provide what is the way in which assets are going to be maintained. If the assets are going to be maintained, process of maintaining the asset expenses incurred, interim plans will be provided by the. If it is not clear, the resolution applicant will turn around to the I'm not providing the finance state, they will be approved by the adjudication. Arbitration. This is also not provided in the model RFRP. Because now the arbitration is good. So the arbitration can take place between the COC, CD and the RP. Any question which is arising out of the resolution process of RFRP and resolution plan, it will be stick to an arbitration. If that has been added in the document, the litigation will not go to it, but we will have to get resolved with the arbitration process. Arrangement and supervision enforcement of liability as per the resolution plan. Rules for formation of management, monitoring committee. These are all open gray areas. What is happening is that as we are experiencing the gray areas, creating issues that after the resolution plan will all be approved by the monitoring committee, which is written in the resolution. Detail. But if the resolution formation monitoring rules and regulation of the operation of the part of RFRP, then it will have to be followed by all the parties concerned. Process of modification of the bill. So these were the basic document which is going to be a crucial document for the purpose of the process which is to be followed. Process to be followed later on for the resolution plan and is submitted, and now we are touching on the topic of the role of resolution. So he is the key person throughout from the day one. He has been the subject to that he has issued the expression of interest. He received the expression of interest. He has valued the expression of interest. He has provided information. He has been participating, or he has been in COC to what are the rules and regulations, what the COC wants. So the whole structure has been already created by the resolution professional as a resolution plan. The resolution plan comes, then he will be having some digital role to play. Here, what I am saying is that what are the roles of resolution professional which he has to preparing the information memorandum, which we have already discussed. Due diligence and resolution is qualified as a criteria COC. He has to certify that the resolution applicant is not disqualified under Section 29A. Provide undertaking as per the RFR. Examining documents of expression of interest to certify the party is qualified. Provide relevant data on all access information for resolution. Right for site visits. This all we already discussed now. We're repeating it from the point of view of a role of resolution. Like we shall examine each resolution. Of the code. Provide for which is what is attached to is the provide for the payment of CR because provide for the payment of debts of office. What is not the amount paid to the each traded amount to pay to such traded amount to industry. So this is the has provided for the payment of debts of the financial credit, not voting. The financial credit who is not voting should not be paid less than the provides for the management of the affairs to operate and after approval of the plans. If the plan is approved by the COC, provides for the implementation of the provision. Implement any of the provisions of the law. Now all these things will be verified to ensure that all the compliances required under the code is complied. The resolution plan is good enough for the purpose of this. Then the resolution plan will be after the discussion will be submitted. Has to undertake the due diligence of the resolution application. Evaluate the resolution plan given the evaluation. Criteria on the basis how the resolution plan is satisfied. Well, a feasibility and viability of resolution. The COC in the has to certify that feasibility and viability of the resolution plan, but at the same time, the resolution professional also has to ensure that the resolution plan is feasible and viable. Facilitate negotiation with the resolution application. So whatever the RFRP has decided, whatever is going to be the model and negotiation terms, pieces of that we should facilitate and provide negotiating model. Basing the resolution plan for approval of COC. The plan has to be approved by the COC. If the plan is approved by COC, then approved by COC. Approved with the rate plan to be submitted to HDB authority. How many change the must report which is to be application to the adjudicating authority, and this particular form H in every terms and conditions which the professional has to ensure and then satisfy that the resolution plan is complies with all the conditions of the. This is something which I just quoting it from from the Supreme Court. Honorable Supreme Court and within Kishan case in their order discussed the importance of resolution professional resolution on completing all respect. Quoted as under resolution professional is to ensure the resolution plan is complete in all respects and to conduct due diligence in order to report. Are you putting it durable? So resolution professional to conduct due diligence in order to report to committee whether or not in order. So the resolution professional is to undertake due diligence is that it is in order. Even though it is not necessary to give evidence while submitting to the committee whether it would be the fitness of the things to, if it happens, the due diligence report required with respect to each of the resolution plan under consideration and to state briefly as to why it does or does not conform to the law. This is the very basic values for taking due diligence and Form H. If these two are combined, our whole resolution plan of each and every angle has been looked into and is fit for placing before the consideration of. Now this is the resolution plan is prepared. And then the resolution, I'm just enumerating the resolution plan is prepared, what it should contain, so that while examination as resolution professional, it should not come out failure the deficiency in the resolution plan. It may be somewhere repetitive, but I just said for the purpose that what should be the content of the submission of binding resolution plan. Resolution plan should be binding and undertaking with the compliance law. Power of attorney, no resolution is applicable to bank guarantee, unexpected deposit. This is the bank guarantee and performance guarantee document to be submitted. Overview of profile of the resolution application. Position of ownership structure of the resolution of corporate structure of the resolution application. Parent company and because this is required for the purpose of again examining the qualification of the section. Okay. Then credit worthiness of the financial capital. Resolution application is capable or not capable has to be examined on the credit worthiness. It will not happen that it is NK in some other company in some other way. Which is normally, again, these types of litigations have been happening in CLT. That company A was not NK in this country, but you are the NK in some other country. This will come out only when you have the due diligence creditworthiness of the party. To provide the credit rating of all credit rating documents, evidencing the creditworthiness of the resolution applicant or other obligates of the resolution. I have that you may be getting funded from some other party, but some other party is also competent and have a creditworthiness to support the resolution plan. Previous experience of to provide the details of witness. Indicative handles of events of implementation. This is the crux where he has to come up with how much time the whole resolution plan will get implemented and how the financial trade are going to get this resolution plan. Supervision of resolution plan and how it proposes to implement the resolution. Evidence of funds available to fund the resolution. Just to provide this from where balance sheet and the other documents of the person from where the funds are available. From the point of view, knowing the credentials of the resolution applicant, and how the resolution applicant is satisfying initial criteria to become the resolution applicant. And these are the criteria, these are the mandatory content of the act. Another regulation that is the provides for the payment of CRP cost in prior to the payment of the other debts. Provides for payment of the data. Implementation and supervision of the resolution. It does not confirm any of the provisions of the it conforms to such requirements as we explained before. The result must include how it has dealt with the interest. Very important from the point of view of that if it is taken you may be the amount of the secured financial credit, but for the purpose for the operational credit also, there should be some interest for that they should also get. In the resolution of the region, consider the interest of all stakeholders. Implementation schedule, management and control of business. Adequate resources required in implementation. Details of the company and other connected of the resolution applicant, other connected persons to prudent decision while constituting arrangements for funds that will require for working capital. Now, this is the thing that also only picture that he will do. That for that, he has to say that how he will working capital and arrangement for the debt should be arranged without any obligation or purpose of COC. Mean that counting on the debt of the COC, which cannot be, he should have a arrangement. If he wants to put an obligation of the, he should negotiate it separately outside, and then if any member of the COC is willing to continue, then in that case he takes consent and then it should be provided as a part of the resolution concepts that effectively demonstrate financing proposal. Financial ability. These are the ways to provide financial ability of resolution applicant. Last 3 years annual report. Afford to financial creditor for liability. Likely to confirm resolution provides for. This is the separately again what is part of that. Form H will get a repeated also. Resolution happy cost the bank to payment of the other debts is a repetitive. It also will come to the bank state that what will payment to the debts of operational creditor amount to be paid to operational creditor event of a liquidation under amount that would have been paid to such creditor is the amount. Priority payments. Operation credit should be paid in priority over financial credit. Financial creditor who have a right to vote and did not vote in favor of the banks should be paid in priority over financial credit who voted. It's something which is not a part of the code, but which will be with the CEO and leadership of the facing that avoidance transaction, the proceeds of the same event. The resolution professional examined all the books of account and has a list of the avoidance transaction, and he has submitted that to the adjudicating authority for the adjudication of. It might happen that in the process of the adjudication, order for the some amount to be paid to the corporate or state corporate body. How to deal with such type of an amount? How to deal with the proceeds of the same event? We are not discussing what are the avoidance transaction. We are not discussing how to determine the avoidance transaction. How to deal with the money which is going to come. Will be the resolution plan approved by COC. This is approved by IDA, and so that how to deal with that money. The code is silent about how to deal with the proceeds of the avoidance. If any receipt was. The amount is uncertain at the time when this amount. Whereas the resolution plan is approved by COC without considering the reliability of any amount towards avoidance transaction. So this is something extra which is going to be received, which is not part of the resolution plan. The resolution applicant has not envisaged any amount which is going to come from the avoidance transaction because he knows that he might not get it. So he might not go for it, but the COC, in case if he gets it, how to deal with that money. At the stage of approval of resolution plan by the certificate, how to deal with the amount receivable against the transaction. Now today you don't know how much is the money that is going to be received. So under these circumstances, how to deal with them? One of the options which can be considered is that the amount receivable towards affordable to like assigned to a trust created for the benefit of our creditors for rupees 1. And when any amount is received, account of these transactions will be distributed to creditors as per the provisions of section. So that everybody gets it in a liquidation proceeds, which is to be distributed by the trust created for this purpose. And all the such rights are assigned to the trust for rupees 1, so that any amount received will be distributed by the trust to the creditors. Role of RA and RP during the pendency of approval of the plan. These are the practical problems which everybody is facing. RA has no role to play during the pendency of approval of the resolution. Applicant can take charge of the senior only after the adjudication authority approval of the resolution. Terms of the resolution plan can be I guess to get some exemption. All the terms of the plan in terms of upfront payment, etc. Keep that he is given charge of the corporate data. Using RA can incorporate the process of management of. When we are discussing all the RA party, we discuss about this part that we can provide the way in which we deal with. RA may be provided with the rights to operate in a series of rent, fee, a share of profit, or agreement to operate on a processing charges basis, whereby RA is operating the plant without managerial rights or rights, but having already operating rights under the control and supervision of RP. This is done only to protect the continuity of business due to non-operation. This arrangement has to be recorded in writing to be approved as 66%. The funding done by the RA will be considered as interim. We are just taking in a practical approach that when the assets are available but it cannot be put to use because of the tendency of the approval of the plan, we have worked out a via media which is legally binding that he given only taking the plan on a processing charges basis. If he getting the processing done for which he is paying the price to be accordingly, then he can operate the plant. As soon as he plant is approved, he becomes the resolution applicant, take the charge of the plant. If the resolution plan fails, he has to vacate and then he has to liquidate the assets. Approval of resolution plan by the COC. Resolution plan approval is a process again where the COC has to consider the resolution plan by 66%. Evaluate the resolution plan as per the evaluation criteria. Evaluation document. Resolution professional will prepare a worksheet on the evaluation matrix, which will be circulated to all the COC members for their evaluation and then acceptance. Record its deliberation on the feasibility and viability. It is a duty constant in the code that feasibility and viability is to be examined. Examined to be COC. Vote on all such resolution plans. There are more than one plan. Where only one resolution plan is put to vote, it shall be considered approved. If there are more than two or more resolution plans put to vote simultaneously, the resolution which receives the highest vote, but not with the requisite vote, will be considered as approved. But two or more resolution plans are receive equal votes, but not less than requisite votes, the committee shall approve one of them as to the tiebreaker formula. Okay. So this is the process again, where they approve two resolution plan approved, the tiebreaker has to be decided well before the voting. The RP shall submit the resolution plan as approved. Approval of resolution plan by the advocate already certified the resolution plan as approved. Now we have we have come to a stage where we had initially started with the expression of interest, information memorandum, with RFIP preparation resolution. Government evaluation due diligence has been carried out. Every party and all the stakeholders are having their own interest. If all this has come to completed, it has been approved by the COC, then the resolution professional will submit the application with the adjudicating authority for its approval. If the adjudicating authority is satisfied that the plan has approved, the committee of payments 4 or section 30 meets the requirement in the reported section 2. Resolution plan satisfied that the resolution plan has provisions for its effective implementation by order approve the resolution which shall be binding on the corporate data. When the resolution plan is approved, it will be binding on the corporate data, its employees, the shareholders, creditors, including the central government, to whom a debt in respect of binding under law to the time. Such as authority is to whom script the own guarantors and others before all the resolution. Once the resolution plan is approved, whatever is stated in the resolution plan all gets approved, and everybody has to abide by the resolution plan. Adjudicating authority is the limit jurisdiction. The adjudication plan which has been approved by COC has taken into account everything: viability, feasibility, commercial aspects, technical aspect, technology, everything has been considered in the adjudication plan after full negotiation and for the negotiation process prescribed in RFRP. It has come to that it is approved. Once the resolution plan is approved by COC, the commercial wisdom is already been exercised. Now, the adjudicating authority will not get into the commercial wisdom of the COC, but will look into all the things, what is required, that it is in the process has been followed, and all the stakeholders should consider. What is the jurisdiction, or what is the limited jurisdiction of the jurisdiction of approval of the plan, which is well defined prescribed by section 2 and 1304. Adjudicating the question concerning the scope for interference with the commercial aspect of decision. The decision of COC in terms of what is amount by the decision funds. So how much is the haircut? And there is no scope for substituting of the resolution plan. If within its limited jurisdiction, you can come in a franchise shop. It will only send the resolution plan back to the committee for resubmission after a certain parameters. So the resolution plan, once it is approved, and applicable and value of all, and for approving also, the commercial wisdom is approved by COC and not by. Resolution plan is in a first step. Approval of resolution plan is to start with the first stage, extinguishment of all liabilities. Once the resolution plan is approved by the adjudicating authority, all claims which are not part of the resolution extinguished, and no person will be entitled to initiate or continue any proceedings with respect to a claim which is not part of the resolution plan. So whatever is in the resolution plan, that only remains, those liability remains, the liability gets extinguished. The legislative intent behind this is to free all the claims so that the resolution will start from a clean state, is not from the any surprise claims. We are left with some 10 minutes, but we are looking some more slides. I will speak it very fast. Effect of order resolution plan. The moratorium series. RP shall forward all records to IBBI. RP to send a copy of resolution plan order to participants and RA. They have the party COC members or resolution. That he can have the send a resolution, order of the resolution. RP official within 15 days of order of attempts. Resolution shall take effect without compliance institutional document of holding shareholders meeting. No proceedings shall be initiated against prior to the insolvency. All the implementation of the adjudication of the approval. They can seek the assistance of local. In case suppose the order is passed, but the resolution taking not getting the position, we can apply to the local authority for the assistance. Creditor who is agreed by non-implementation apply to RA for the correction. Liability of a higher officer. The code has amended the regulation method, amended inserting the section 32A. Corporate data shall not be prosecuted for an offence prior to the commencement of CRP and shall cease to seal, and series shall not be prosecuted for an offence. So that he is free from those offenses which are committed prior to the date of approval of the resolution plan. Similarly, no action shall be taken against property of the corporate data in relation to the commencement of CRP. Only thing which we have to note is that provided it is not that the prosecution was against the promoter or the management of the company. So the promoter is the who is against by, he will not get this. We have considered this role of safety in different aspects. Throughout we have been speaking about that all the pillars of the insolvency are the timeless. I mean the sense of the IBC. The successor is when it's timely delivery. Already losses. It is sharp Victoria. Resolution applicant is already committed to price the resolution plan. Now he has already committed the price when he submits the resolution. The financial ratios and funds arrangement of RA will change over a period of time. If approval of the plan is delayed, RA may lose interest in the series. Market dynamics may change. Operating losses are an additional burden on RA to fund the same till approval of the plan. All these factors are deterrents for RA to propose the resolution plan. If these deterrents hurdles become directly linked to the timeliness of approval of the plan are removed, the economic value of the stress asset will go up and number of resolution plan will increase considerably. We understand that if a judgment pronounced is not operated in implementation, whereas the law is not implemented by the government, thereby the contempt of all to implement it within the time provided in law or judicious tribunal drawn for the preservation of fundamental rights of citizens. I know this is a concern for all the fellow members sitting in this conference. On behalf of all of them, I request to be taken up the appropriate authority to focus whether post time is reduced to get justice of the fundamental right of property for one and all, or the success of insolvency and bankruptcy. This is my own version. Defended that order, and if we come back to the timeliness as provided in the code earlier of 180 days, 270 days, or 330 days, then the certainty is that the resolution plan will get validity by 330 days. It can put the resolution plan. If he is not certain about the number of days he is going to get put into, then he is not willing to put the resolution. I'm thankful for Asha Ghoshal for participating in preparation. I'm thankful for allowing me to present.
Thank you very much, sir, for such a wonderful A to Z deliberation on the resolution.
I tried my best to put everything in a very limited time of allotted to me. So I tried my best.
No, it's a wonderful within the time frame. You see, like the objectivity of this law is also the same. Within the timeline, the process has to be completed, and for the adding value or creating the best, the same way you also follow the same principle within the time. Though in the initial remarks, so good time has been spent to start with. But I really appreciate the way A to Z about the whole resolution process you brought to the benefit of the all the participants. There are the certain questions which has been raised by our participants. I would like to place before you to really bring out a more clarification to the participants whosoever has raised these questions.
Yeah.
Sir, the first question related with the section 5, subsection 26, definition of resolution plan covers the amalgamation and merger.
Correct.
So, if the corporate debtor is merged in the resolution applicant through the process of resolution plan, whether section 79 as to carried forward of losses will be applicable, as here the PAN is changed, is there is such pronouncement etc. is available in any system of the I hope you have understood the question raised by one of the participants.
The question is more pertaining to the applicability of Section 79 of the Income Tax Act, that would the continuity of the losses will be available, and then he will be able to adjust the losses against the income of the amalgamating company. So this will have to look it from the income tax point of view. I understand there are some provisions which has been amended, and we may have to look into that to come to that answer. Rather than from the insolvency, it has to be more of a question of the income tax.
Yeah. Sir, another question is, please guide how to deal with the creditors whom could not submit their claims within the timeline. Is it mandatory to provide by them for them by the resolution applicant? As the IBC is silent and as per the code, only those creditors who have submitted their claims are the actual beneficiary of the resolution plan. Need your guidance by one of the participants.
Only the claimants who has filed the claim form are entitled for the participating in the COC or the operational creditor. The person who has not filed a claim will not be able to participate. Timelines of 90 days is already provided in the Act and rules, so that he has to abide by this. And in case he wants to, if he is not filed within the 90 days time, then he may make an application to the adjudicating authority by giving the reasons that why he has not been able to file. And if the adjudicating authority is satisfied with the reasons provided by the claim by the creditor, he may get the order in favor to get they are added to the claims, list of the claims. Otherwise, he will not be allowed to, if the RT has no right to add into the list of the claims.
Yes, sir. Another question is, the resolution plan many times ignores statutory claims that are in the financial statements, books of accounts. Once the resolution plans get accepted and approved, there can be no further claims by those that are so ignored. This is a case for other creditors as well. How correct is this when such entities, small or big, are exposed to the financial stress on account of these aspects? This is the question raised by one of the participants.
This has been something which has come up in the NCLAT yesterday, if I'm not wrong, that the statutory bodies are not claiming within the period of 90 days and the claims are coming thereafter, which is, as an RP, he is not able to add it. But it was noticed that the claim which has been already there in the books of account and which has already been accepted by the corporate data in the balance sheet why that should not be considered. The judicial members have considered that this go to an IBPI and they consider the amendment of the regulation. This is considered. This is the development of just recent this week, yesterday, and what will come out will be difficult to say at this stage. Code may get amended, or regulation may get changed, or there may not be any amendment. Then whatever is there as of today in the statute, that the claim which is received will be considered, claim not received not be considered. One of the judgment is that the RA is RP, resolution profit, is not going out to all for the claim. If the claim is submitted, he will accept it or reject it. But if the claim is not submitted, he cannot do anything beyond.
Ji sir, ji sir. Sir, there is a one question, though it's typically depending on the how the one manages the so. One of the big challenge in CIRP is managing the affairs of the company. The challenge is even more if the company is large. How do you think a resolution professional can work out ways and the methods in managing such affairs of the company? Can you suggest with your practical exposure to this area, to the new one, those who have been handling first time, what strength one has to develop, how one has to carry with, if you have anything to guide to the participants?
The resolution professional, he is in charge of the duties to manage the affairs of the corporate data. If the corporate data is reasonable big size, where the plants are at different places, operations are at different places, many divisions are there, under those circumstances, it is advisable that let the employees who are there continue with the corporate data. They are already knowledgeable and they have experience of managing. Whereas only the board of directors are suspended, and in case in his experience he comes out that some person who is making hindrance to the process of the managing the affairs of the corporate data, take a call for the individual person rather than taking a call that all should go away, that all new team has to come in. That if the new team comes in, he will not be able to manage because he don't have a past experience of managing the affairs. So he should try and see that he continue with the mid-level management, or the seniors who can have a faith and who can support him to continue the management of the affairs. So he can have the supervisory control management rather than on each individual item by management.
Sir, you see, like in the system of managing the affairs as a going concern, one has a different strategy. Sometimes a professional carries with a definitely sometimes so many stress time or sometimes so many difficult time one see with. What strategy you prefer? Basically, what strategies need to be undertaken by the resolution professional to maintain as a going concern? Which methodology or which strategy which you would like to advise with your own practical exposure to our participants?
The resolution professional, as soon as he takes the charge of the corporate data, he should make the analysis of the profitability of the organization. Which are the departments, which are the operations which are profitable and which are non-profitable. If the operating cost and the fixed cost is higher and these are contributing towards the losses, then he should make immediate report and say that these are not the interest of the corporate data to continue. He can reduce the operating cost and the fixed cost, or he can close down those part of the sections so that the loss is so he can control the losses. Only the operations which are profitable could continue rather than continue the operation. He can close these operations which are not profitable, because in case if there is a loss and if it is not profitable, the CRP cost to that extent will be getting mounted. The question will come, who will pay for the mounting loss burden CRP cost? The resolution applicant will say, I am not willing to pay for the loss which you incurred, and the COC will say, this is the loss which is operational cost of the corporate data. Why should I incur that loss? So CRP cost, when it gets mounted on account of the operational loss, then the RA will not burden it and the COC will not take in charge. And as a prudent management, there's a duty to see that you will not incur any cost and not losses. You close down those operations with the consent of the COC that these losses are mounting and which should not be contained and reduced, and those operations should be closed down.
Sir, one more practical difficulty which normally the professional feels like while this process is being started, the availment of the interim finance, that really goes a very difficult things to take care of during this period. So which methodology or how do you, during your own practical experience, how do you manage it? What is the best methodology by which we can avail the interim finance while during the CIRP process?
Out of my experience of a 20 company, only one company I could get the interim finance. Out of 20 company, only one company I could get interim finance. So it is very difficult to get the interim finance because the people are aware that it is provided. Very difficult to get it back, though it may be the priority of the CIRP, where he is having first claim under 53(1), 53(1)(a). So that but he is not willing to take the risk that if the losses are mounted, if it's there because he is also not from the operations of the company or from the assets of the company, he will be the loser. So that he is not having any confidence of putting his interim finance to the corporate data. Even to the extent the financial creditors who are participating in the COC, what they are aware about the securities also, they are not willing to come out and put the operations of the company. It is for the RP to ensure that as much as possible, we should reduce the cost of the CRP and don't incur the losses, additional losses.
Sir, at the end, really been, I can, on behalf of the committee and on my own personal behalf, I'm really very grateful and thankful to you for giving such a within a time frame or within the timeline or within the shortest time, you have guided each and every participants, including me also. I, on my own behalf, on behalf of the chairman and the co-chairperson, Durgesh Kabraji and Sri Priyaji, and my behalf, and on behalf of the participants also, on behalf of the committee, I'm very grateful and thankful to you, more particularly as such a huge experience and the practical exposure to this area. This has brought us closer to the better understanding, and understanding once cleared and execute accordingly, the results are expected to be, or the probability of getting the work done in a time-bound manner and with a purpose for which one is being engaged with are definitely going to give us more strengthen. So I, on behalf of everyone, I'm very grateful and thankful to you. Thanks to the each and every participants also. Those who have made this program really been a successful, more than 2,000 participants from all across India, from the different location, because this is virtual programs has brought us more closer, big in numbers. Physical programs always remains a constraints. Knowledge goes to only few, but virtually knowledge are being spread. Whosoever is there at his own place in office or residence, they get the best of the knowledge from the best of the speaker. To participants, I am very grateful and thankful to you for making it a success. Chairman and the Vice Chairman of the committee, Durgesh Kabraji and the Sri Priya Kumar from our southern part of the country, and Durgesh ji from the western part. I am sitting here in Delhi, northern part, and thanks to the Secretariat, the Secretary of the committee, Rita ji, and her team, for arranging all the programs, coordinating with the technical teams. Thanks to the technical team also. Thank you all. Thank you very much, and hope this program will go a long way, and the knowledge make us more power and more strengthen. And today's knowledge also made us more stronger. Me also more particularly. Thank you all. Thank you very much.
Thank you.
Thank you, sir. Thank you so much, sir.
Thank you.